As gas prices skyrocket, attention is turned to public pits, where brokers trade oil futures, the right to buy or sell crude oil at a specific price on a future date. But far away from the hue and cry, hundreds of millions of barrels of oil futures contracts are traded electronically every day. More than 30%, experts say, exchanged in so-called dark markets, the exact size and scope unknown to U.S. regulators.
If you can trade out of the sight of U.S. regulators, you can manipulate those markets.
Michael Greenberger is a former top staffer at the Commodities Futures Trading Commission, or CFTC, which regulates the trading of commodities like oil in this country.
At least 70% of the U.S. crude oil market is driven by speculators.
He recently told Congress that speculation is placing a huge premium on the price of oil. How much per barrel?
Well, there have been various estimates, anywhere from 25% to 50%.
People can actually corner the market and drive up the price. When there's no policeman on the beat, you know that crime can go up.
More and more people are wondering about the role of one of the least known but most powerful foreign exchanges, the Intercontinental Exchange, or ICE. By the end of 2007, the all-electronic exchange accounted for nearly a 50% market share of all global oil futures contracts, a total of 138.5 million, up 49% from 2006. Today, it boasts more than 2,100 individual traders representing all of the major players in oil, banks, hedge funds, energy companies, investment giants. And according to this securities filing, two of those giants, Goldman Sachs and Morgan Stanley, were founding partners of ICE.
The fact that they started this shows the intent of where they wanted to go.
Which was what?
Which was to trade crude oil and energy products without any police in the United States supervising it.
43 3/4, get bubbles!
That's because it's considered a foreign exchange. Taking advantage of a loophole created by the CFTC, the company says since all of its energy futures business is conducted here in London, it is not subject to U.S. laws. Over strong criticism, the CFTC agreed. All this despite the fact ICE headquarters are on the 5th floor of this building in Atlanta, its primary data center in Chicago, and nearly all of its trade settled in U.S. dollars.
It is a charade, and it defies explanation.
In a statement, ICE CEO Jeffrey Sprecher told CBS News, ICE is committed to providing the same visibility in our oil markets that exists for U.S. exchanges, and that ICE Futures Europe is fully regulated by the British government. But British financial authorities are notoriously lax.
Why is the price of oil futures rising so quickly?
Now Congress and others are asking just how much of the crude oil futures market is being manipulated by either excessive buying designed to drive up the price, or phony transactions that imply a supply problem that does not exist. Today, under pressure, ICE finally agreed to impose stricter limits and greater transparency on trading, shedding some much-needed light on the dark side of oil. Armen Keteyian, CBS News, Washington.